Hello, in this video, I'll continue our discussion about closing entries and specifically talk about the post-closing trial balance and why accounts prepare the post-closing trial balance. This process is automated when the company uses an accounting software program. Nonetheless, the controller or senior accounting manager must tell the system that the period is now closed, which means that the other accounts can no longer post any invoices or journal entries to the prior period. This process can be quite complicated if multiple regions or legal entities are involved. Some accounting processes, such as currency revaluations for multinational companies, can often only be run if all legal entities are closed. So even though the closing process is automated for businesses with accounting software, doesn't mean it's easier. It can be far more complicated, especially in large corporations where all accounting teams across regions and countries must work together to close the accounting period. The eighth step in the 9-step accounting cycle is the post-closing trial balance. It contains only the permanent accounts which were not closed at the end of the period when we posted our closing journal entries. We prepare this post-closing trial balance to prove out that our trial balance still balances and that all revenue, expense, and drawing accounts have a zero balance. It might seem like an unnecessary step, but you've probably come to realize how easy it is to make a mistake. Accounting is all about checks and balances. So this is just an extra checkpoint to ensure that we're still balancing and that all temporary accounts have a zero balance. If the post-closing trial balance does not balance, the accounting records contain errors. That means we'll have to find the last point where your trial balance balanced and work forward to identify where you made an error. If you're asking yourself why you're learning this process when this process is automated in most companies, here's the answer. First, you're learning the basics of accounting and will need to be able to understand what an accounting system is supposed to do. In addition, you will likely be involved in system testing when the software company introduces system updates. So how can you test when you don't know what the system is supposed to do? This is the post-closing trial balance for Eli's Consulting, which is shown on the first line of the header section. The second line contains the title, post-closing trial balance, and the third line, header line, contains the date, December 31st, 2021. Next, we list all asset accounts and their balances in the appropriate column. Remember that accumulated depreciation is a contra asset account with a credit balance. Next, list the liability accounts followed by the capital account. We then add up all of the debits and credits, and both should equal. If your total debits do not equal your total credits, first calculate the variance, meaning the difference between the total debits and the total credits. Does that amount seem familiar? Did you forget to list one of the balance sheet accounts? If that's not the case, divide the amount by 2 because perhaps you entered the amount on the wrong side, meaning a debit as a credit. If that's not the case, divide the difference by 9 to check if you transposed the number, meaning you entered 540 instead of 450. If you still can't find it, go back to the last trial balance that balanced and double check each account that you listed in the post-closing trial balance. With time, you will develop a sixth sense for where you made a mistake. A good approach is to work slowly and double check your work along the way. This way, you won't have to spend a ton of time finding your errors.